My name is Elise Olwig, and I'm a junior at Marquette University in the Applied Investment Management program. I'm covering international consumer staples, and today I will be discussing the Estee Lauder Companies, Inc. As many consumer staples companies were adversely affected by the pandemic, I was looking for a company in a position to capitalize on the post-COVID recovery momentum and emerge in a better position than before. A recent press release announcing that Estee Lauder was acquiring a majority stake in the rapid growth skincare company Deciem caught my eye as a particularly strategic maneuver. In addition, our portfolio is overweight in Europe and the Americas, so I was seeking out a company with a large and growing revenue exposure in the Asia Pacific region. Estee Lauder's strong and growing position in China deemed it a particularly attractive investment. Estee Lauder manufactures skincare, makeup, fragrance, and hair care products under the brand names Estee Lauder, Clinique, Origins, MAC, Bobbi Brown, etc. EL operates through the following segments: skincare, which make up 52% of fiscal year 20 revenues, makeup, which make up 34%, fragrance, which make up 11%, and other, which make up 4%. EL products are sold in approximately 150 countries and territories, with revenue derived from Europe, Asia Pacific, the Americas, Africa, and the Middle East. The company was founded in 1946 by Estee Lauder and Joseph Lauder, and it is headquartered in New York, New York. While COVID-19 had an immense retail impact in fiscal year 20, Estee Lauder's skincare segment still saw double-digit growth year-over-year. Year-over-year net sales in Asia Pacific grew 15.38%, reflecting growth in all product categories as well. Notably, 40% of all Asia Pacific sales were attributable to China's online retail channel. Mid-pandemic, management introduced their post-COVID business acceleration program, which is expected to introduce 300 to 400 million of cost savings annually and expand Estee Lauder's online presence. Furthermore, Estee Lauder recently posted strong Q2 results, as their EBIT margin expanded by 172 basis points, driven by lower in-store selling costs and continued cost containment measures. Q2 results were also enhanced by a strong 11/11 shopping day in China, where Estee Lauder reported positive 27% local currency sales and was ranked #1 in beauty. Due to their strong and growing presence in online retail channels in key geographic markets, strategic cost-cutting efforts, and robust top-line growth in the skincare segment, it is recommended that Estee Lauder be added to the AIM International Fund. First driver, strategic M&A. On February 23, 2021, Estee Lauder announced the agreement to increase its stake in the Canadian-based Deciem Beauty Group from 29% to approximately 76% in a $1 billion cash transaction, representing a market value of $2.2 billion and an EV to sales multiple of approximately 4.8 times. Deciem is well known for its fast-growing skincare brands, The Ordinary and Niad, which have gained a cult-like following amongst younger consumers. Deciem will contribute an additional $400 million in annual net sales for the skincare segment, representing 3% of Estee Lauder's fiscal year 20 net sales. EL has further agreed to buy the rest of the stake by fiscal year 24, giving them full access to a high-growth, high-margin brand and increased exposure to the entry-level skincare consumer that Estee Lauder can trade up to other brands over time. Driver 2, margin expansion. In fiscal year 20, management implemented a post-COVID business restructuring program intended to accelerate the shift to e-commerce platforms and divest in traditional brick-and-mortar locations. In Q2, e-commerce accounted for 30% of total sales and 50% of total sales in the Americas and Asia Pacific regions specifically. This mix shift allows for a reduction in the need for 1,500 to 2,000 positions globally through fiscal year 23 and a related annual reduction in SG&A costs of $300 to $400 million. In addition, skincare, Estee Lauder's highest margin segment, is also the fastest growing segment, fueled by consumer wellness aligned sentiment because of the pandemic. The Asia Pacific region offers the highest top-line growth visibility, with China as a key market. Fiscal year 20 revenue in Asia Pacific increased 15.38% year over year compared to negative growth in many other geographic segments. Many long-term secular growth drivers such as premiumization and a greater market penetration will result in continued expansion in the region. In addition to the opening of an R&D innovation center in Shanghai and a manufacturing plant in Japan in late 22, this all enhances product quality, availability, and efficiency. In order to reach an intrinsic value for Estee Lauder, a 10-year DCF was constructed. Using a terminal growth rate of 2% and a WACC of 5.60%, an intrinsic value of $334.20 was reached. The sensitivity analysis on the terminal growth rate and WACC ranged from $221.75 $726.19. Additionally, a P/E multiple valuation was calculated using a 2021 EPS of 5.74 and utilizing a blended average PE multiple of 54.56 times, resulted in an intrinsic value of 313.03. Finally, an EV to sales multiple valuation was conducted using a blended average EV to sales multiple of 6.93 times, resulting in an intrinsic value of $303.44. By weighing the three models, 60-20-20, a price target of $323.82 was reached, resulting in a potential upside of 11.87%. Estee Lauder currently pays a dividend yielding 0.70%. Key risks for Estee Lauder include COVID-19, market trends, and consumer preferences and competition. Particularly, Estee Lauder's products are highly levered to global economic recovery, as per capita spend on prestige beauty has a 93% correlation with GDP per capita growth. Fabrizio Feta was appointed CEO of Estee Lauder in 2009 after serving as the COO and president of the firm since March 2008. Previously, Mr. Feta was the president of Procter & Gamble's Global Snacks division. Additional relevant experience at P&G includes 10 years in the Health and Beauty division from 1982 to 1999. William P. Lauder assumed the role of executive chairman and chairman of the board of directors in 2009. It is to be noted that the Lauder family has 86% of the outstanding voting power. Due to their strong and growing presence in online retail channels in key geographic markets, strategic cost-cutting efforts, and robust top-line growth in the skincare segment, it is recommended that Estee Lauder be added to the AIM International Fund. Thank you, and I look forward to Q&A on Friday, March 5th.